Well, new data from the Fed shows the average credit card carrying American has around $5,700 in debt. The average interest rates on that piece of plastic is hovering around 20%.
Imagine holding a small, shiny piece of plastic that can unlock a world of opportunities, or trap you in a cycle of endless debt. Credit cards, a tool so powerful that it can either be the cornerstone of your financial freedom or the cause of your financial downfall. In today's video, we're diving deep into the world of credit cards. In today's world, the idea of financial freedom is something everyone talks about. But did you know that one of the key tools to achieve this freedom is the credit card? However, if not used wisely, this very tool can trap you in a web of debt. So, what exactly are credit cards? How can they help you achieve financial freedom? And most importantly, how can they lead to financial disaster if misused? Stay tuned as we unravel the mysteries behind this double-edged sword and explain credit cards in a way that will be both enlightening and easy to understand. Let's take the story of Sarah, a young professional just starting her career. Sarah came from a modest background where money was always tight. One day, her friends suggested she get a credit card, saying, "It's like free money, use it when you need it and pay it back later." Sarah loved the idea and quickly applied for a credit card without thinking much about it. At first, Sarah used her credit card for small purchases, like coffee, a few clothes, and movie tickets. But over time, she started spending more than she earned because the credit card limit made her feel like she had more money than she actually did. Then came the day when Sarah's bill was so high she didn't know how she would ever pay it off. Credit cards can be a powerful tool for building financial freedom, but only if used responsibly. Always remember, just because you have a credit card doesn't mean you have more money. It's a loan you have to pay back, often with interest. Use it wisely. Keep track of your spending and pay your bills on time. To understand the power of credit cards, we must first travel back in time. The concept of credit has been around for centuries, but the modern credit card as we know it didn't appear until the mid-20th century. It was a time of booming economies, and with it came the need for more convenient ways to make purchases without carrying cash. The first credit card was born in 1950, created by a man named Frank McNamara. The story goes that McNamara was dining out when he realized he had forgotten his wallet. This moment of panic sparked the idea of a charge card, and thus the Diners Club card was created. How credit cards became a tool for financial freedom. Fast forward to today, credit cards have evolved into much more than just a convenience. They are now a fundamental part of modern financial systems. Used wisely, credit cards can be a powerful tool for building credit, earning rewards, and achieving financial freedom. The psychological trap of credit cards. Credit cards are not just financial tools. They are psychological traps designed to encourage spending. Studies show that people are more likely to spend more when using credit cards than when using cash. This is known as the pain of paying, a concept in behavioral economics that explains how the physical act of handing over cash is more painful than swiping a card. When you swipe a card, you don't feel the immediate loss, and this can lead to overspending. But it's not just the ease of spending that can be dangerous. The concept of minimum payments can also lead to a false sense of security. Sarah and John might think they're managing their finances well by making minimum payments, but in reality, they are falling into a debt trap. The debt trap and how to avoid it. Credit card debt is one of the leading causes of financial stress. According to a recent study, the average household credit card debt in the United States is over $6,000. And the interest rates? They can be as high as 20% or more. This means that if Sarah and John only make the minimum payment on their $6,000 debt, it could take them decades to pay it off, and they could end up paying thousands more in interest. Strategies for using credit cards wisely. First and foremost, only charge what you can afford to pay off in full each month. This way, you avoid paying interest altogether. Use credit cards for purchases you would have made anyway, like groceries or gas, and pay the balance off immediately. Next, take advantage of rewards and cashback programs. Many credit cards offer points or cashback for every dollar spent. But remember, these rewards are only beneficial if you're not carrying a balance. Otherwise, the interest charges will outweigh any benefits. Finally, monitor your credit score regularly. Your credit score is a crucial factor in determining your financial health. Keeping your credit utilization low and making payments on time will help you maintain a strong credit score, which in turn will give you better access to loans, lower interest rates, and more financial opportunities. The road to financial freedom credit cards are not inherently good or bad, they are simply tools, and like any tool, they must be used correctly. By understanding how credit cards work, the psychological traps they can set, and the strategies for using them wisely, you can make them a cornerstone of your financial freedom. Remember, financial freedom isn't about how much money you make, it's about how well you manage what you have. And with the right knowledge and discipline, your credit card can be the key to unlocking that freedom. Using credit cards wisely can be a game changer for your financial health. Here are some of the best credit card tips to help you maximize benefits and avoid common pitfalls. 1. Pay your balance in full each month. Why it's important: paying your full balance each month avoids interest charges, which can quickly accumulate and lead to debt. This also helps you maintain a good credit score. Tip: set up automatic payments to cover the full balance or at least the minimum payment to avoid missing due dates. 2. Understand and maximize rewards. Why it's important: credit cards often offer rewards like cashback, points, or travel miles. By using your card strategically, you can earn valuable rewards for purchases you'd make anyway. Tip: choose a card that aligns with your spending habits. For example, a cashback card for groceries and gas, or a travel rewards card if you travel frequently. 3. Keep your credit utilization low. Why it's important: your credit utilization ratio, the amount of credit you're using compared to your total available credit, impacts your credit score. Keeping this ratio below 30% is generally recommended. Tip: if you have a $10,000 credit limit, try to keep your balance under $3,000. If you're regularly exceeding this, consider asking for a credit limit increase. 4. Monitor your credit score and report. Why it's important: regularly checking your credit score and report helps you stay informed about your financial health and identify any errors or fraudulent activity. Tip: use free services or your credit card issuer's tools to monitor your credit score. Request a free credit report annually from each of the major credit bureaus: Experian, Equifax, and TransUnion. 5. Avoid cash advances. Why it's important: cash advances typically come with high fees and interest rates that start accruing immediately. They can be a costly way to access cash. Tip: use alternative methods like dipping into your savings or using a personal loan before resorting to a cash advance. 6. Don't apply for too many cards at once. Why it's important: each credit card application triggers a hard inquiry on your credit report, which can temporarily lower your credit score. Applying for multiple cards in a short period can signal financial distress to lenders. Tip: space out your credit card applications and only apply for cards that suit your financial goals. 7. Take advantage of introductory offers carefully. Why it's important: many credit cards offer 0% APR introductory periods or sign-up bonuses. These can be beneficial if used correctly, but can also lead to debt if you overspend or fail to pay off the balance before the intro period ends. Tip: plan your purchases to take full advantage of these offers and ensure you can pay off the balance before the regular interest rate kicks in. 8. Use credit card alerts. Why it's important: alerts help you keep track of your spending, due dates, and any unusual activity on your account, helping you avoid late fees and fraud. Tip: set up text or email alerts for payment due dates, large transactions, and low balance warnings. 9. Don't carry a balance for rewards. Why it's important: the interest you pay on a carried balance will usually outweigh any rewards earned. Paying off your balance each month is more beneficial than carrying a balance just to earn points or cashback. Tip: prioritize paying off your balance in full each month, regardless of the rewards you might earn. 10. Know your card's perks and benefits. Why it's important: many credit cards offer additional perks like purchase protection, extended warranties, travel insurance, and concierge services. Knowing these can save you money and enhance your experience. Tip: read through your card's benefits guide to understand what's available and how to use these perks effectively. Now that you've learned the best tips for using credit cards wisely, it's time to take control of your financial future. If you found this video helpful, don't forget to hit the like button, subscribe for more insightful content, and share this video with your friends and family. Together, we can build a community of smart, informed consumers. And remember, your financial freedom starts with the choices you make today. See you in the next video.